Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. We know that last week was quite the interesting marketing week, and we're going to take a look at not only the huge kills that were there, but the talk about packers. Are they short bought? Are they making money in all of this, and what it means to our cattle producers? And then the recession. We know the recession's been a definite talk. How is it affecting the industry? Are we already just dealing with it as expected? Lots of things that we're going to talk about today. As you can see, Brad Kooima is joining us. He is with Kooima and Varlick out of Sioux Center, Iowa. So got to start out this huge kill of last week. Did that catch you by surprise as you started to see the numbers add up?
Well, I think it caught everybody a little bit by surprise. And to be blunt about it, these guys don't kill these cattle unless they have the meat sold and or the demand to do it. And of course, there has to be an available supply. But, what we've seen the last few weeks in particular, Susan, as we've talked about before, is we've seen huge kill, declining weights, or pulling cattle forward, right? It felt like we were, but it's certainly nice to see the proof in the numbers. And, the other part of the deal is these packers still enjoy very, very big margins, estimated around $300 a head. I think that's conservative for some of the integrated. I mean, the fully integrated ones. The fact that they still have this kind of a willingness to take on the supply of cattle and pull the weight off is very, very encouraging to me. Your prelim there, you talked about a little bit of the recession curve, and we're going to talk a little bit more about that, I think, deeper into the program. But at least now, we can, if we have a full-blown down and dirty recession, demand will be worse. But if you want to take your Polaroid of today, boxes are $270. Hamburger is priced extremely competitively with chicken and pork. It really is, because those others are really high. And on the other side of Father's Day, we always slow down the middle meats, so we'll see. I remember last year we talked about, we're going to slow down the middle meats, right? That's always a steak demand. It's a hot dog deal now. And we didn't, because the only good thing I can think of about COVID, but the one thing that came out of that is we retrained, or we changed the paradigm there, where the folks are eating a lot more stuff at home rather than at hotel restaurant stuff. And, so last summer, we didn't see much of a drop off at all. I'm curious to see. Obviously, I know $6 gas, yada, yada, is a concern. But in the here and now, the short-term fundamentals are very encouraging.
As you look at the macros of this trade, what catches your attention?
Recession. This is above my pay grade. I'm not an economist. I'm a cattle nerd. But I'm told, and I've looked back at other years, if you go into deep recession historically, yes, the cattle market struggles. Now, on the other side of that, often when you start talking about, going into recession, the only way you can tell when you're into it or out of it is when it's behind you. Okay. So, my sense would be that we're already well into it. I think that, to me, the gas thing is the absolute tip of the spear here. The cost of travel, if that cuts into the disposable income for somebody, are we going to go on vacation, or are we going to not go out to eat? Or it's real. Now, crude oil prices are sharply higher today, new contract highs. They are not worried about it, right? So I guess I'm going to treat the cattle market on the fundamentals that I believe in, and that is that we've got cattle pulled forward, that there's less cattle in the north, that the packer wants to kill as many as he can get his hands on, and the futures are at a $10 discount to what I got for cash cattle last week. So to me, the cattle have a fair bit of this built in. They've got a large discount built in my estimation.
So as you talk, since we're starting to talk the recession, how do you see this affecting not only the cattle market from the sense of purchases from consumers, but for our cattle producers?
It hasn't slowed down the feeder cattle buyers, by golly. Those feeders have been hired in a giraffe's dentist the last little while. Nothing personal to you ranchers out there, but it'd be interesting. There's a couple of videos at the end of the week this week. Will give us a little more indication of what some of us are willing to pay come fall delivery. My expectation of that's a good question, and I don't have a good answer for you. But I can only think of how I tend to think of things. Then, I tend to get much more hand to mouth. I'm not going to buy any more feeder cattle out there, in the unknown because I don't know what my cost of gain is going to be. I don't know what interest rates are going to be. I don't know, so I'm going to be a little more hand to mouth in that regard. And I can't imagine that I'm the odd one here. I mean, I would think that even if I was fairway, you'd go like, well, maybe we better not buy a month's worth of ribeyes. Let's buy what we need for next week, which causes a little bit of a problem. But then you also get the secondary impact like you had last year, I thought, or last week, rather, when we had sharply higher cash prices. Nobody needs to kid anybody, 3 to 5 higher on cash cattle in my neck of the woods. And it was largely because I think the Packers kind of overplayed that. Well, we better kind of wait and see. And like, oh, crap, I need to buy cattle, and so it can work both ways. Certainly, the fact that rising interest rates, I mean, this is not news. I mean, come on. We've been talking about the interest rates are going to go up. We've been talking about for months. Just do it.
Right.
I wish they would have got on board with it sooner, right? And slowed this thing down sooner. So some of this, I'm going like, why now do you care about it? We've been hearing about it in the news so much. But, I tend to be a guy that I'm rooting for the cattle to get up and out of here, obviously. So you can temper all my comments with that. But the recession fear is real. If it was just up to cattle, we'd be just fine, in my opinion.
So are the Packers short bought?
Oh,
Or
yeah.
and are they trying to, obviously they want to make money, but how do you see that all playing together?
Well, I think some of them are extremely short bought. There's been plenty of stories that, people I know, cattle that get sold Friday and they got delivered on Monday, sold last Wednesday, got delivered last Thursday. I think if you remember, there was quite a bit of contracted cattle done for June. The performance on these cattle have been good all the way since last winter. So let's just take a hypothetical. Let's say you had cattle contracted for June at 2 over the June futures. There's lots of that done. So the Packer, June's at 134. So the Packer can call those in and pay 136 for the cattle. The market last week was 143. Why wouldn't that Packer pull on all those cattle and pull them ahead? And I think that's what's happened. So you've used up that inventory. They've used up their available supply. Now they've got to turn to the open market and chase. I think, barring some total meltdown on futures, I think they'll do that again this week, chase, and the market will be fully steady to higher.
All right, lots of things we're going to look at going into next week, post Father's Day. By the way, happy Father's Day early to you.
Thank you.
All right, that has been this week's Cattle Call. As always, we remind folks commodity futures and options involve a substantial risk of loss that isn't suitable to all investors. And that's been the Cattle Call. I'm Susan Littlefield on the Rural Radio Network.